Welcome to a research update at ChinesePennyStock.com. My name is Neil Flynn. We've recently initiated coverage at YOSN Group, who are an electronic sales and wholesale distributor of smartphones, who focus primarily on Samsung, Apple and Lenovo products. In 2004, it was a heavily traded stock and was a big retailer in China with over 1,200 stores. But they primarily sold fax machines and printers, which is a dying technology, and of course they had a low profit margin. So the company decided to restructure its operations and sold most of its stores and focused primarily on the smartphone market, which had a much higher profit margin and was more popular in China. The company will also soon make an announcement which we expect will be positive for the company's long-term outlook. In China's 12th five-year plan, the government targeted domestic consumption as the main driver of economic growth to replace investment. Whilst private consumption overtook exports when the five-year plan was released, the target is for domestic consumption to grow much higher than exports and to become the driver of economic growth. Chinese retail sales are increasing every month on a year-on-year basis. This is consistent with the government's five-year plan and with the online retail boom seen in China. Online retail not only replaces in-store sales but actually generates extra sales. In fact, a recent report by a leading Western consultancy firm found that for every $1 of in-store sales replaced online, an extra 40 cents of new business is generated. According to most recent data, third quarter sales in 2013, China's smartphone market was up 13.4% to 87.4 million units sold. So for the first three quarters of 2013, it was a total of 230.5 million units sold, which is up 93.3% year on year. Market leader Samsung has doubled its sales in 2013, and with its recently released Samsung Galaxy S5 phone and the next generation of iPhone being released in the autumn, YOSN Group is set to benefit. After restructuring its operations, YOSN Group is close to posting a profit. It has $1.4 million in cash and equivalents on the balance sheet. And whilst it does have debt on the balance sheet as well, its quick ratio of 0.69 is better than the industry average of 0.59. So with the macro outlook for the industry, its established position in China and its entry into the US market, we're looking at profitability for YOSN Group in 2014. The stock is currently trading at 65 cents, and we believe it's a great value play on the smartphone market and the rising consumer spending in China and the US.